Hey everyone, welcome back to another video. I'm going to be going over Turo Insurance and how it works, and then also what you possibly need after that just to be extra secure. And if you don't mind, please subscribe to the channel. I do all my content for free. I don't have any paid ads or anything like that. My goal is to just give as much information as I possibly can because I don't want anybody stuck in the same situation that I was before I learned all the ropes and was able to get ahead of the game. So let's jump into the Turo Insurance, and I'm just going to go over all the different insurances, the differences, and then maybe help you decide which one is best for you. So there's essentially 5 plans. There's 60 plan, 75 plan, 80 plan, 85 plan, and 90 plan. The way that these are broken down, essentially in the overall type of breakdown, I guess, is percentage based. And so 60 plan, for example, is 60% you get, 40% Turo keeps, and then as you go, it goes with it. So a 90 plan is you keep 90% revenue, Turo takes 10%, and that's for everything. So if you're doing deliveries, if you're charging day rate, it's practically for everything. So let's start with the 60 plan. 60 plan, obviously, you keep 60% revenue, they keep 40%. There's $750,000 in third-party liability insurance. That's for all of them, so that's nothing special. Turo pays 100% of eligible damage costs. That's for all of them, nothing special. The things that are special are these 3 things down here. First is no deductible. That is pretty nice. I mean, if you have even something minor, you can have it paid for by Turo, which is really nice. I mean, with cars, there can be some things that break. Maybe a mirror breaks, like a little side mirror, or like, I don't know, there's so many tiny things that can happen, and there's no deductible. So that's obviously a pro. Includes exterior wear and tear reimbursement. That's pretty nice to have. It's not common that something like that would be used, but it's definitely nice to have. And then includes loss of rental income. This is the only plan that has this, and this is pretty nice. Essentially what that means is if my car breaks down, it's in the shop for, let's say, a week, I'm getting paid back $50 a day, which is, or whatever the amount is in income that I'd be losing, I'm getting that paid, which is amazing. So it's pretty much like if your car's gone, it's still making revenue, which is kind of crazy. Or you get $50 in reimbursement for a vehicle. Essentially why they're giving that is some people are using their personal vehicles on the platform, and this is kind of just an incentive to say, hey, you know, if this is your personal vehicle, if it breaks down, you're still gonna have $50 a day to get a vehicle. Depending on the season, that's pretty reasonable. Usually insurance companies will pay like $35 is the average. For like a standard insurance company, they'll pay $35 a day for insurance if your car breaks down and it's in the shop. So 75 plan, obviously the biggest difference is the split. 75% you keep, 25% they take. Everything else is pretty similar up to here. You have a $250 deductible instead of $0. And then you don't get loss of income, which is tough. Loss of income, super nice. But you do get $30 a day for a reimbursement vehicle during repair. That's also pretty nice. $30 a day probably won't cover the full amount, but it should give you maybe 50, 60%, 70%. I mean, it should give you a good amount of it depending on the car that you want to rent. So that's pretty good. If you do go to a traditional car rental company, you could probably find something for $35 a day. Does include extra wear and tear and does not include loss of income, rental during the repair. So as you can see, the farther you go down, the more changes and the more you lose. So the 80 plan, biggest change again is you keep 80% of the revenue, Turo keeps 20, and then you have a $750 deductible, and then all this stuff you don't get. So no replacement money, no loss of income, no exterior damage reimbursement or extra wear and tear reimbursement. That's for like minor things and doesn't include loss of rental income. 85 plan is you keep 85%, they keep 15%. Deductible is $1,625, and then obviously you don't get these 3 things right here. The final plan, and this is the one that we're on, and I'll tell you why at the very end. It's 90, so you keep 90%. $2,500 deductible, and then obviously you don't get these 3 things. We have done the math plenty of times on our vehicles. This isn't for everybody. I know people that are literally on every single plan, as in like I know people that are on the 90. I know people that are on the 60. I know people that are on the 75, 80, 85. Like there's so many options and there's so many different reasonings behind what people are doing. But we do the 90 plan because we calculated the loss, the amount of money that we lose during rental periods, and we determine that it's above 2,500. So when that hits, we essentially make more money by doing the 90 plan than versus if we were to do the 60 or anything above before the 90. So it just makes the most sense for us. So these are the options for you. Now, another thing that you have to think about is while you're driving the car, because these plans don't cover if you're just driving to the airport, driving it to get it cleaned, driving it home. I mean, there's not a lot of times where you should be driving it, but there are times that you're driving it. If it's your personal vehicle, then there's absolutely going to be times you're going to be driving it. A lot of downtime, especially in the slower seasons. So you have to have your own insurance on the vehicle for yourself. And there's a couple ways you can do that. You can get a personal insurance policy, but you have to let them know that you're renting it, because if you don't, they could drop you. I mean, there's a lot of things that can happen. So you can get like a personal policy with them, understanding that you're renting it. You can get rental insurance through one of the major companies, as in like Geico, State Farm, Liberty Mutual, like all those big ones usually have like a rental section in their companies. Or the last option is fleet insurance. Depending on what you're doing, it's probably the best option because of price. When you're dealing with fleet insurance, they know that you're not using the car very often. Like it's very, very rare. So they understand that the risk is very, very slim. So it's a lot cheaper. So maybe if you're spending $150, $200 a month for insurance, and my buddy's paying like $250 for his truck per month, you can get insurance through fleet insurance carriers for at least, like minimum I've seen is $79 a month, which is crazy. But of course, there's mile limiters, and of course, an understanding that you're renting that car is pretty much out to rent and make money, and you're just using it on its downtime, and it's not very often. So that's a breakdown of all the insurances and what else you need, which is you just need an insurance plan for when you're driving the vehicle, just in case something happens. I hope you learned something. Please subscribe to the channel, and I hope to see you in the next video. See ya.